The stock market is really hot right now. You have stocks like Palantir making all-time highs every day. Robinhood, the same thing. Nvidia, the same boat. But there are some stocks, some big tech companies that are left behind. And usually what happens is that when your Nvidias and your Microsoft, when they start hitting all-time highs, investors tend to look at the stocks that are lagging. And in this video, I will show you 3 big companies that are hitting all-time lows this week and how you can profit from a possible rebound. Let's get started. The first company that we look at is Accenture, and the ticker symbol is ACN. So the thing with Accenture is that they were a victim of the Dodge, job cuts earlier in the year when the government was cutting federal jobs. Accenture is basically a professional company. They offer consultations and consultants to public and the private sector. So earlier in the year when, Elon Musk and the Dodge crew, they were cutting federal jobs, it affected Accenture. So that's why, if you can see from the chart, the stock really fell during that time. It came all the way from almost $340, almost $400 to, right now it's trading around $240. But recently, last week, they had a contract, almost about $150 million contract from the government. So they are in the good books, and the other part of their business is doing well. So Accenture is just a matter of time before it rebounds. And if you look at the daily chart, it's currently sitting at a really strong support level, the 240 level. You can see from here, it was a support. When it hit there, it bounced. It hit here, it bounced. So it's really, really, the chart is really, really sitting on a strong support level. So Accenture is something to keep an eye on, because there's a chance of a rebound. It tried to rebound today. It's up almost 1% today, but it's one of the stocks to keep an eye on, Accenture. That's the first one on the list. And the second one that we will look at is Haspa. So this is it right here, Haspa. So the ticker symbol is HUBS. So this company is a victim of an overlooked sector, right? It's a tech company. They provide cloud-based CRM. But the whole sector is kind of suffering. So what usually happens is that when the stock market is going up crazily like this, there are some sectors of the market that are overlooked. And currently, the CRM environment is one of it. So this company, their sales, when they reported their earnings, their previous earnings, it was really, really good. It was way above Wall Street's expectation. But because they are a victim of, an overlooked sector, the stock didn't move. But if you look at the chart, if you look at the daily chart, it's also sitting at a really, really strong support, just like ACN. It is sitting as a really, really strong support. So, it might be something that, give it a couple of days to settle down, and then we take a look at it, because the daily chart is, the support. This is a really strong support level on the daily chart. So, but once it breaks that support, once it breaks that to 430 support, The next one is, it could be ugly. Let me say, if it breaks that support, that's the only thing that to keep an eye on, because it's really sitting at a strong support. But once it breaks that support, it could be ugly. So that's the second name on the list, and the last and my favorite is CRM, Salesforce. So Salesforce, just like Hotspot, is also a victim of, you know, an overlooked sector, because now everybody is chasing AI. And the funny thing is that CRM, Salesforce is a strong play for AI, right? Um, they also have other companies like Slack. They own Salesforce, own Slack. They own Tableau. They own MuleSoft and about five, six more other companies, right? So they are well positioned in this AI fight, if you want to put it that way. But for some reason, the stock is really struggling. All these three stocks that I'm talking about, Accenture, Hasport, CRM, they are all struggling. The stock is struggling, but the companies are not. That's the difference. It's one thing if the company is struggling and that's why the stock is dropping. Like, Big Bear, when they reported their earnings earlier, uh, late yesterday after the market, you could see the stock dropped almost 30% because the company itself is struggling. But this is the opposite. The company is not struggling, but the stock is. And usually, from my experience, it's just a matter of time before people start paying attention to this, like what's going on here. It was the same with snowflakes. It was the same with snowflakes last year, and snowflakes, it was falling like it, it was falling like a fly. It came all the way down here to $100, around $100. That's how much it fell, from $400 all the way to $100. Sometimes that's how it is. That's how Wall Street is. Sometimes it can be really cruel. You don't have to be, a good company or not. There are some companies that are going up double figures every day, but the, the company itself is not doing well, but the stock is running, right? A couple of weeks ago, it was the same with Microsoft. Microsoft dropped to 2-year low, and the next couple of weeks, right now is trading at all-time high. So when you see things like this, your CRMs, your Hasport, your Accentures, you look at the fundamentals of the company, and the company is doing really well, but the stock is struggling. Then you have to pay attention to the chart. What is the chart saying? You don't want to get in the middle of nowhere. You want some form of, at least you want to be in some form of support, right? And if you look at the chart right here, CRM is sitting at a strong support level right here, the 230 support level. So to me, they have their earnings coming up in the next couple of weeks. I think about 2 or 3 weeks. I think it's on the 28th of this month. So if it can hold the 230 support level going into earnings, I wouldn't, I'll give it time. But if it can hold the 230 support level, it's something to look at. So usually I trade with options. So we are now in August. I will buy, let's say, May 2026, $300 call option. I will start with a smaller position, right? I will start with 1/3 of the maximum number of contracts that I want to buy. So when I do that and I see signs of, buyers coming in, and you want to see like a U shape forming, right? You want to see a U shape. You can see here that This, you can see this here, right? When it bounced, if it formed a U shape. So you want to wait to see if there is a U shape forming, then you join. Right now, you can't see the U shape. So what you want to do is you want to wait and see if it's going to hold a support going into earnings. And then you start building your position. And to me, if you have a small account, the best way to play this kind of stock is not by buying it's not by buying it, because with a small account, there's not much that you can buy to make a significant return. So I do it with options, right? You buy an option that is by at least 6 months ahead, right? So with Salesforce, something like $300 call option that expires next year, May 2026. It gives you time for it to work. And then once it starts working, you see signs, you check the volume also, the volume profile. You can see from here that the volume is decreasing. The volume is decreasing. So what does it say? It means, that it's been selling and the volume is decreasing. So maybe there's an exhaustion, right? And after that, when you see the volume decreasing, you want to see the buying volume increasing, right? Once you see the buying volume increasing, then it's time for you to start building your option position, right? First of all, so three things that you can use as indicators. First, if it's holding the support, in this case, the 230 support level, and also the downward volume, the sell volume is decreasing and there are buyers coming in. The buy volume is going up, right? That's the second indicator. The third indicator is that there's a U shape forming. If you see, yes, there's a U shape forming, then you know that it's also time to get in, because there's a reversal coming up, right? And stocks like this that has fallen from $370 to $230, you can really make it big with options. You can get 200-300% return with options. So that's it for today. 3 stocks that are hitting their 52-week low with a huge potential for a rebound. And let me know in the comment section, what do you think? Are you playing with the options? Do you prefer to buy the stock? And what other stock are you looking at? Leave the comment in the comment section. And thanks for watching. I'll talk to you later. Bye.